Hey everyone, welcome back to Corporate Decoder. Today we're diving into the latest from Eyenovia, a company with a name that sounds like it should be fighting robots in space. Turns out they are making eyedroppers, sort of, but a peek at their recent filing hints that maybe their vision for the company needs a little correction. Eyenovia is an ophthalmic tech company trying to change how we get our eye meds. Instead of drops, they're pushing their OptiJet platform that dispenses medicine spray. Sounds fancy, but recent news suggests it's not all clear skies. The big headline, their phase 3 trial for Micropine, a treatment for nearsightedness in kids, didn't hit its main goal. Despite years of work, it didn't show that it worked, or at least not good enough. Ouch, that sent them scrambling for a new plan. The company had to restructure to minimize expenses, and now they are exploring options. Layoffs affected approximately 75% of their workforce. That sounds like damage control. One of the big steps the company has taken to make sure they are considering all possible options for them, they have engaged with an investment bank to consider what to do next. Chardin Capital Markets is assisting them with considering a full range of strategic options, including selling the company or a reverse merger. As a result of all this, the company halted sales and promotion for now and are focusing their development on OptiJet Gen 2. But here's where it gets interesting. Eyenovia is now looking at a potential business combination with Betterlek. Betterlek is another pharmaceutical company that focuses on glaucoma treatments. The plan right now is to do a reverse merger clover. Right Ayatollah would essentially take over Eyenovia. According to the letter of intent, the deal would give Betterlek stockholders about 83.7% ownership of the combined company, leaving current Eyenovia stockholders with only 16.3%. This deal is a work in progress though and may not go through, as the letter of intent is non-binding and negotiations are still ongoing. This may mean the agreement is subject to change or the proposed business combination may not happen at all. So what are some things that might affect Eyenovia's future? The company lists a whole bunch of risk factors. Let's hit some highlights. First up, they admit they will need more cash to even keep operating, which is always a red flag. Then they acknowledge that finding this new source of money may not happen. They also admit their search for a new strategy itself could hurt their stock price. Uncertainty spooks investors. A reverse stock split had to happen in order to regain listing compliance with Nasdaq. Then there's debt. They've got a loan with Avenue Capital, and even with a modification agreement, they're not sure they can keep up with the terms. Not a great place to be when you are trying to sell the company. So let's have a look at the numbers. The filing shares the market value as of June 30, 2024. The value of the company held by non-affiliates was just about 32.5 million. The company also confirms they have never declared any dividends and don't have any plans to do so. This is where we see the losses. The net loss for 2024 was about 49.8 million compared to 27.3 million the previous year. That's a big jump in losses that you don't want to see. Their gross profit isn't really profitable at negative 3.9 million in 2024 compared to negative 12,000 in 2023. They had a huge hit of close to 4 million in cost of goods sold. The company had to write down the value of a large portion of its inventory. That could be due to them going bad or just to decrease cost. The biggest expense for the company in terms of research and development in both 2024 and 2023 was in salaries and benefits at about 6 million each year. However, if you take a look at selling, general and administrative, the salaries actually increased close to 25% from 3.9 million to 5.2 million. In sales and administrative, you have to watch for these huge salary booms because it could mean bloat and management shakeups. The board needs to be careful about these costs for going forward. The report does admit that there were disagreements with the accounting, which is another area of concern for the company. On the balance sheet, the company had just over 2 million cash on hand and a stockholders deficiency of around 13 million. That is not a great position for the company to be in. The company needs to pull something out of its hat in order to come out on top and keep the ship afloat. It seems that their loan with Avenue Capital has been amended to defer payments until September 2025. In the meantime, the agreement forces the company to put the money it raises towards paying down the debt to Avenue. This may not be good for long-term shareholder value. The thing that Eyenovia has going for them is intellectual property. They currently own 22 patents and 9 patents that are in progress. These are patents that protect their proprietary technology. One area that may affect shareholders is intellectual property infringement. That could cost the company to pay for damages against other companies' IP. There is one risk that everyone is seeing these days, and it is the cost of everything going up. That may reduce the chances of the company becoming profitable at all. They are also concerned about new regulations or changes that can affect their ability to manufacture and commercialize, and that any marketing approval may be short-lived. The company is also worried about keeping its staff on board and the potential risks caused by its employees. That may be why there are so many layoffs. Perhaps it was seen as a potential liability. One last big one is cybersecurity. While the company has not seen a breach as of yet, they state that cybersecurity and ransomware are a big concern that they are attempting to mitigate. So after looking at this SEC filing, what's the story with Eyenovia? While they've got some innovative technology like their OpJet spray dispenser, it looks like they are not sure where to put their efforts and how to make the best of it. They're burning through cash, key clinical trials failed, and now they're hunting for a buyer or merger partner to hopefully salvage something for shareholders. The biggest strength is probably in their IP, in their technology. If someone could make it work, it would make the company really successful. One of the biggest risks of the company is if a deal with Betterlick does not go through, it's a tough situation and the numbers don't exactly paint a rosy picture. There are too many outside forces that could take the company out and it may be too far gone to even fix. Thanks for watching. What do you think about Eyenovia's situation? Drop your thoughts in the comments below and don't forget to like and subscribe for more corporate deep dives.